Hello friends, welcome to a digital blogger. Today we're going to talk about 5 different ways to pick intraday stocks. Intraday trading, as we know, is a very unique domain. It includes buying and selling of securities within the same trading session. It capitalizes on the volatility of the prices of the securities to earn profits. There are multiple things an intraday trader goes through. That person has to go through different trading strategies, put in techniques, use some tools and procedures to finally come up with profits. Let's see how you actually go ahead and pick these stocks. Let's get started. Click on the subscribe button and remember to press the bell icon for regular notifications from our digital blogger. We need to understand one thing first. If we want to be a successful intraday trader, we need to understand that the most important aspect of intraday trading in the first place is to pick intraday stocks that will be able to give returns and profits as expected by us. That is cliche, that is something that we need to know from the very forefront. But the profits in intraday trading depend on multiple factors. There are different kind of traders available in the market who are going to put in their money and then get the profits. But what is the experience of the trader is something that is very important to understand. What is the trading style? What is your trading style? How do you actually put in your money in the share market? What is the capital available with you? What is your appetite for risk? How much risk you can take within intraday trading? And finally, what is the market situation? This is something that is not in our hands. This is something which can be affected domestically as well as at global level. But what is the market situation? It's something has to do with whatever profits you're going to make in intraday trading. So all these aspects are there. But again, coming back to the central point again, how do you pick the stocks? And then from there you start your journey towards getting some profits. But it is something like cooking a meal. Like imagine if you are a chef, if you are cooking something for yourself, for your friends, for your clients could be. But you forget the main ingredient. Whatever you're cooking, let's say you're cooking Shahi Paneer. If you're putting in some masalas all there, putting in some oil, using some gasoline, everything, you're using all these things and putting them in place. But let's say you forgot to put in paneer. If you do that, obviously the whole dish will be a disaster. Exactly something to the point that we're trying to make here. Whatever strategies you put in, whatever experience you have, whatever techniques or trading platforms you use, whatever technical indicators you put in, if you do not start well, if you do not pick the right intraday stocks, you are not going to make the profits you are looking to make. So that is the way we look at this. So now let's move ahead and talk about those 5 different ways on how you actually can pick stocks. First up, liquidity. It is the most important criteria. Liquid stocks are traded in high volumes and large quantities and can be bought and sold without affecting a price a lot. Now, as in intraday trading, you need to understand that statistically speaking, liquid stocks show more movement in price in a short period of time, giving the trader ample opportunities to trade. Also, the liquid stocks are less unpredictable and less chaotic, giving the trader a good chance of accurate prediction of price movements. So a very precise and effective way to pick intraday stocks is to pick stocks with high liquidity. It definitely works. Second factor is extensive research. A very crucial element to pick intraday stocks is to do a lot of research. Successful intraday traders are those who keep themselves abreast with the latest happenings of the market. At the same time, they know what market news is going to impact what kind of sector, and within that sector which specific stocks are going to be hit the first ones. So it's basically, in a way, they understand the whole chain situation in the way stocks and businesses are going to react to different news. The research must also include the historical study of the stock, both technically and fundamentally, and also studying the sectors and indices to understand this own interest and then to know what is exactly is happening. So there is no point of confusion when you're actually following the current news. You are looking at the stock, you're looking at the sector, and then performing technical fundamental analysis on a regular basis. So this is something that becomes a habit. It cannot come in a day or two. You have to eventually understand this and then make it as a part of a process. And once you do that, then it's going to be relatively easy for you to know what news are going to impact what kind of sectors, and then again which specific stocks are going to be impacted too. This is going to be very crucial for people who are looking to be very serious in intraday trading. Third factor is moderate volatility. Now when you choose stocks that have a strong correlation with the major sectors and indices, That is where predictability and reliability comes into picture. Any good or bad news is going to impact those stocks in the same way as it impacts the entire sector. These stocks follow the current trend. Strong stocks remain strong in the bullish market. Weak stocks remain weak in the bearish market. So it's very predictable in that nature, and you have low chances of getting a loss in such trends. Also, in order to pick intraday stocks, the intraday trader must basically choose stocks that have high or rather moderate volatility. High volatility is going to actually be negative for you. They are going to be unreliable and they involve huge risks. So make sure whatever stocks you're picking, volatility is always taken care of. Next factor is volume. Volume is super duper important. This comes back and attaches to point number 1 on high liquidity as well. Stocks with high volume indicate high liquidity, which is a boon in intraday trading. The volume of a stock is basically the number of times a stock is bought or sold in a specific time period. More volume means that there is more interest in the stocks, either in buying or selling it. So people are actually looking up to those stocks. This proves to be very helpful for intraday traders, as all the technical indicators also work best with high volumes. Intraday traders mostly use trade volume index. This is one sort of a reference that if you want to basically use it, that particular index indicates the money, which particular money is going in, what particular money is going out of an asset. That is kind of an advanced feature, but stay tuned to the factor that volume is super duper important, and these factors are basically mentioned in every trading platform. Whatever trading platform you use, whatever stock you pick, they will tell you whatever volume has been traded for both buying and selling for that stock. Then the next and final point is low bid ask spread. Now the bid price is the price where the trader can sell the stock. Ask price is the price at which you can buy the stock. The difference between the bid and the ask price is called the bid ask spread. It must be low in nature to make sure that you are at minimal risk, and the kind of profits you can gain from that share particular stock trading is definitely going to be on a positive side. Let's take an example to make things clear for you. Let's say there is a stock which has a bid price of 2530.35. Ask price is 2530.6. The spread, the difference between these two bid and ask prices, 0.25 rupees. Similarly, there is another stock with a bid price of 47.20. Ask price is 48.35. Spread is 1.15 rupees. So the spread in case of the left stock is definitely lower as compared to the one displayed on the right part of the screen. So as mentioned in the rule, the stocks that you're looking at must have a low bid ask spread, and that is why the one at the left part of the screen is a far better deal for you than the right one. Similarly, you have to look at these stocks whenever you're looking at the trading platform. They will give you the spread between bid and ask, and from there you can make a specific assumption which can be conclusive in nature. So these were 5 different ways we wanted to discuss with you on how you actually can go ahead with picking the intraday stocks for yourself. There are different ways. You can pick 2 or 3 ways at one point in time, but make sure that you are not looking at only one factor. There is always going to be a mix for at least 2 to 3 strategies before you actually go ahead and pick those stocks. If you want to have a detailed understanding of this whole tutorial, you can check out ourdigitalblogger.com/intraday trading/pick intraday stocks. The article is available in both English as well as Hindi. If you want us to suggest a stockbroker that matches exactly with your requirements, put in your details at ourdigitalblogger.com/free stockbroker suggestion, and we will arrange a call back for you. Thank you so much for watching this video. Follow us on Facebook, Twitter, Tumblr, SlideShare, and definitely on YouTube with the channel Digital Blogger itself. Thank you so much again for watching this. Bye bye.